Hi everybody, welcome to another update on the Gold Forecaster Index, the holy grail to predicting gold prices. In my last video, I said that gold would be looking better and we had to watch the debt ceiling, which is now resolved. So what did gold do? It actually went down from 2020 to 1960. So apparently people are less interested in buying gold at this moment. Yeah, we have some seasonal dips here. So let's see our new data point for the gold forecast index. Our new data point points up, so that's a good sign. That's good, but we are still negative below the zero line. So maybe next month we could go a bit higher and that would be bullish. But it's a start. It's a start and yeah, at least it isn't dropping more. So I think we can be a bit more bullish now. Taylor roll is still above zero. That's bullish gold. Misery index. I think unemployment will start rising now. Yeah, I think it's bottomed out and it should rise. Inflation, on the other hand, is still going lower. But of course, it depends on oil, and I think oil could go higher. Real output is still very bad, so that's good for inflation. GLD hasn't done a lot. It's still in an uptrend, probably bottoming out here, but it's a bit flat. COMEX a bit higher, but it's not like it's soaring. LBMA is also just hovering about, but it's not crashing. So I think gold should be fine. China gold demand was a bit lower, but year over year, so this was last year, it's a bit higher. So gold is still doing well. Okay, so it's not going to crash. Then we have silver on the Shanghai Futures Exchange has actually dropped a lot. So this means that speculators are leaving the market. That's bearish. But they could easily just come back if we get a recession. So here are some charts about central banks buying gold. So we should be fine with the central banks buying more gold. That should push up the gold price. Mint sales were not that good. It's back down. Yeah, bad seasonality probably. Silver premiums still very high on the coins. Junk silver, however, has dropped, so the premiums went from 70% to 46%. So a bit of weakness. Also in Shanghai, the premiums are not that high anymore, so the Chinese are not buying yet. Premiums, yeah, pretty flat. Shanghai silver premiums also pretty flat. Gold premiums on APMEX are still elevated at 6%. So in the past we had 3%, and then now you can see that the premiums are at a new plateau. So if you know that premiums typically go down when gold prices go up, then when this plateau goes back to its history, I would think that gold would go higher. So this is actually positive. PSLV premiums have gone up, so that's also good. I added a new chart here for open interest. So what this tells you is if the speculators are interested in gold or not. So if interest goes down, then typically gold goes down. And now we are at 450,000, so somewhere here. So the interest is going down again, but that means that at some point we are bottoming out. So this is typically a bottom for gold, but it can be a very long bottom, maybe even a year. So something like this could happen. But of course, if this open interest goes back up, then gold could shoot much higher. Same chart here. Open interest is pretty low. This could actually be a bottom in gold if the interest rises again. Managed money COT report. We are pretty neutral here. There could be still some downside. This is not at this level yet. So a bit of weakness is possible. Same here. For silver, it's a bit neutral, but here could go up a bit more. So the price could go down. But I think we are pretty flat to neutral on the COT report. The lease rates, let's take a look. Lease rates went up again, so the cycle has started to go up again for the lease rates, which means gold is now in a downdraft. So there could be some weakness in the month of June. When this goes up, this could go down. Yep. So these are the cycles. I would buy somewhere here in July, August. Tips very negative, but gold has been very strong. Seasonality, as I told you, we are in June. That's typically a bad period to buy gold. Negative, red candle. So I would start buying in July, August. Same with silver, bad month. If gold can stay strong this month, then we will be very bullish again. This 30-year, 10-year ratio is still flat. It's hanging on here, so that's a good sign, but we need to see this go higher. Yeah, Google Trends is also telling us that there's not a lot of interest in gold at this moment. So look at this. May and June are lower than April. So in April, we had a lot of interest in gold. Now it's a bit gone. Debt to GDP should rise because we have breached the debt ceiling. So that should be good for gold. And they are now going to issue bonds. Near-term forward spreads. I don't think we have a new data point yet, but this is also bullish. Oh, we do have a new data point. So we had minus 1.22 and now it's minus 1.44. So we are still in this low forward spread, which means that the 3-month rate will go down in the future. That's bullish gold. So these are typically bottoms in gold. And this also means that there will be a recession. So that's bullish. Overall, I think, yeah, just wait a bit in June and then we can start buying. Let's go over the copper checklist as well. Economy is still not that great. Global real economic activity is negative. Yeah, the latest status on copper warehouse inventories is very fine. It's still dropping. That means that copper should do well. Let's see how this evolves. Power consumption is a bit flat, so I don't think that energy is a buy. Maybe oil, but not energy like natural gas or coal. We don't have China credit impulse data yet. Shanghai was still at the highs. GDP forecast is almost going negative, so that's good for gold. Copper should be doing fine in the coming years. The refined scrap to copper, this is not the latest chart, but we are somewhere here, so in the sell zone. So yeah, copper should be flat, but of course we are approaching the positive seasonality for copper. China imports is still positive, so looks fine for commodities. Yeah, Danny has still not updated his forecasts. He still thinks that stocks are going up 10% by next year. So he's right. Stocks are moving higher. So that's amazing. Inflation, it looks like inflation is starting to flatten out again. So except for the PPI is still very negative. But I think inflation is coming back. Latest data says that break-even inflation is rising again. It will depend on the oil price. Zillow index is still going down in growth. So rent and CPI could fall further. Here no update yet, but it looks like there's nothing, no problems in the economy. We have a positive leading index. Airplane data was at the highs, so that's also good for copper and oil. Over to the stock forecaster index. The latest data is negative, so we should be topping out in stocks, which is good for gold. Leading indicators were negative for April, so that's also bad for stocks. But Yardeni is positive. Also, the earnings are positive, so we don't see rollovers in the earnings yet. So it's a mixed bag, positive and negative. CapEx expenditures are down. That's typically not good for stocks. Smart money flow index was neutral. Temporary help services still not falling, so I think the economy is pretty strong. We're not seeing any problems yet. Truck sales were also at the highest level in May, so no problems here either. Corporate profits are also expected to be high. So this orange line is in a positive, so I think corporate profits will follow that orange line higher. Now liquidity, yes, liquidity is going to be sucked out of the economy due to debt at treasury issuances, so we could see some headwinds from there if this correlation is true. On the durable goods, no problem yet, still very strong. So I don't expect unemployment to rise that fast, even though I really want that because that's good for gold. But we're not seeing it. Bank tightening conditions typically tell us that there will be a recession. Yeah, let's see if it happens. And when the Fed stops hiking rates, then we will see stocks fall. So I think the Fed will stop hiking at 5.2, and then typically stocks will start to become weak. As you can see here, stocks will start to become weak a year later. Same here, a few months later. Each time that the Fed stops hiking rates, the stock market will fall. So that's probably what's going to happen somewhere here in the future. But we're not seeing it yet. The Citigroup Economic Surprise Index is still positive, 28. That's bullish. Home Builder Index also bullish. So yeah, nothing to see here in the recession camp. So this is the bond forecast. Let's see what we have here. Yeah, you can see on this chart that foreigners are actually selling bonds as a percentage of total debt. So this is telling me that bond yields will probably rise as foreigners sell the bonds. So this is the 10-year yield, probably going to go to 6% maybe, if this trend holds, if these foreigners keep selling the bonds. That's not a good sign for bond holders. Money supply is still decreasing. Let's see how far it will go down and when the Fed will do QE again. But currently it's dropping, which is bad for gold and stocks. Same here, central banks are tightening. All of them are tightening. So let's watch inflation. But so far inflation is still persistent. And the Fed, the Treasury doesn't have any money left. So they will need to issue a lot of bonds, almost 1 trillion for this year, I think. That's a lot of bonds. Deposits, oh, you can even see that deposits actually went back up. I had hoped that deposits would drop, but it's going back up. So that's not that good anymore for gold. Fed funds rate hikes. Let's see what the Fed will do. I think, yeah, Fed funds rate is probably going to be flat. It's not rising that much anymore. I think, yeah, we will go to 5.2 in the Fed funds rate, and that will be it. We will get a pause. And there is a link here that you can use to look at the probability of a rate hike. So here you can see that we have 65% chance of 5 to 5.25%, and no higher rate hikes. So I think we will stay at 5.25. That's about here. And then we will stay at this level, which is actually good for gold. Now over to the deficits. The goods deficit was higher. Services deficit, yes, services surplus went higher. Okay, and here, yeah, the leading indicator is pointing down. That's good for the deficits. More deficits will come. Export price index went down and import went up. So that's a sign of more deficits. And here both went up, export and import. So that's inflationary. And on the import and exports, both went, yeah, this is just Q1 data, so no new data. Capacity utilization went up, so that's inflationary. Yeah, actually this looks good. If the capacity utilization stays at 80% like it is now, then I think inflation should stay high. Each time when we see these high numbers of capacity utilization, the inflation numbers, the CPI will be very elevated. So that's a good sign for inflation. Now let's go over some blog posts. I think oil is going higher. So these are the inventories for oil, and we just got a new report today. Inventories went down on oil, so that's very good sign. And the inventories were actually going up here, up until today. And this is looking like a pivot point. So from now on, inventories will drop and keep on dropping until the end of next year. Whenever that happens, oil goes up. So here we went down, oil went up. Then inventories went back up due to a glut. So that's when oil started to drop. And now we have a pivot point here where we do the same as in 2020, and oil should move to 100. Okay, I think we should keep our oil assets. And as oil moves up, inflation goes up and all commodities will follow, like copper and gold. Except natural gas, because natural gas is a peculiar one. We have demand that's flat, so we have the same demand as last year, but supply is higher than last year, and it's not going down anymore. and the demand is also not going up. So that means that the inventories will keep on rising. We will have a glut in natural gas. So as long as we don't see a change in this trend and this trend, I don't think we should be in any natural gas stocks or fertilizers, because that's exactly the same. OPEC oil cuts. Yeah, we had OPEC cuts. That's typically bullish for gold. We also had a Sprott holding update, and he bought Equinox Gold, which I actually like. And this is a royalty play. And he sold some silver miners and Sibanye. Yeah, Sibanye is not doing well because they have palladium and rhodium, and those are crashing. So that's good that he sold that one. Yeah, just take a look at what Sprott did. Gold is still very low as a percentage of global reserves. So we have a long way to go in the gold price. That should move higher. I wanted to end with the In Gold We Trust report. You can download it here, and I will go over the most important charts. So gold ETF flows are now moving from negative back into the positive, so that should be good for gold. We also have gold to S&P ratio very low, so gold is very cheap compared to stocks. So this should move higher in the coming years. Gold as a percentage of gold reserves, pretty low, right? And as a percent of reserve assets is also very low. So there's plenty of upside if those central banks start buying gold, and they are now starting to buy it. So all-time highs in central bank gold purchases. That's going to continue, I think. You can see that here. It's mostly the undeveloped markets that buy gold. The developed markets apparently don't need to buy anymore because they already have gold. So here another chart about gold demand from central banks, all-time highs. And here they started buying actually after the financial crisis, and then they started to increase their gold holdings. Gold reserves are going down, so yeah, that means that there's not a lot of gold out there, which means the price should go up. This is the discovery cost of explorers, and you see that the costs keep going higher. And this is at the all-time high, 370. But the average size of these discoveries is basically the same. 2.7 million ounces doesn't change, but the cost changes. So this is why I don't like to buy explorers. Recession. If you believe that we are going into a recession, I think we will get a recession. Maybe next year or at the end of this year. Then you can see that gold is actually the best performer. Always in the positive during a recession. The mining stocks also very positive, but in one phase they could go down, maybe due to the margin selling, but then they will go back up. So no worries. I think we should stay in the mining stocks and commodities and gold, of course. This is the projection of the gold price. You can see that it's going higher. That's the target price. Another chart. We should go to 2,500 by the end of this year, and then go much higher to 5,000 in the coming years. So it's a good investment. This is gold to S&P 500 ratio after inversions. So now we have a massive inversion in the yield curve. So what is the performance? The performance is always positive. So we went up 200% in 1970. We went up almost 100% on average. So we are currently here. There should be upside in gold. And we are now very inverted in the yield curve. The same chart here, very inverted, right? And when this goes up, gold should also go up. So that was the update. I think June will be a bit of a weaker month seasonally, but in the long run, I think we should go higher. Oil will also go higher. Copper will probably also go higher due to the low inventories. So I'm staying in gold, oil, and copper. So that was the update, and I'll see you in the next video. Bye.